Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a very timely one for you. Matt Schultz is going to be joining us, who's the executive chairman of CleanSpark. Matt's been on the program before, and CleanSpark just put out their Q3 numbers last night, and their shares are trading up in excess of 22% during today's session. So I'm super excited to talk to Matt about their expansion plans, their HODL strategy, and where he thinks this company may be headed over the next couple of years. Now before we get into all that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you have any questions for Matt, what you thought about their quarterly results, and your price target on Bitcoin moving into next year's halving event. Now with that being said, let's get into today's interview. Okay guys, so we've got a very special guest today, Matt Schultz, who's the executive chairman of CleanSpark. As mentioned in the intro, Matt's joined us a number of times on the channel, and today is extremely special because they just came out with earnings, Q3 results, and we're seeing share price move in excess of 20 to 22% today to the good. So very timely video, and really excited to have you here today, Matt.
Bryce, thanks for asking me to come back. I always enjoy our chats, so thanks again.
No, I'm a huge CleanSpark supporter. I've been with you guys since the start, and we were saying off camera there, it's really nice to see the investment community, the analysts. We have some analyst price targets that just got updated, really taking note of this story because this is one I've definitely seen potential in, really from our first interaction, Matt. So thanks for coming on, and we'll continue this partnership. But I had a few softball kind of questions. What's happened since our last video? Talk about operations, etc., which we'll get to. But Q3, the analysts call, the numbers that you guys put out, the direction, the HODL strategy, the dilution strategy, just so much to be excited about. So maybe let's start there, Matt. What are the big kind of catalysts or changes that people need to be aware of for CleanSpark here?
So that's a loaded question. This space is unique in that with difficulty changing with literally every new computer that's plugged into the network, if you aren't growing, you're shrinking, you're dying. And so hit rewind about 18 months and the capital markets changed dramatically for this space. And so we kind of see ourselves as really pragmatic and you see companies that are fully committed to a HODL strategy, Bitcoin maximalists. We really see ourselves as Bitcoin rationalists in that, if I can produce a Bitcoin for a third of what I can sell it for, then selling that Bitcoin is less dilutive and carries a greater impact in the ability to push those funds towards CapEx. But the inverse of that is that if Bitcoin appreciates in the manner that, I think many people now expect, you don't want to be stuck without a HODL balance. So, November 21, we sold it all in the $60,000, $50,000, $40,000 range, and we were widely panned for that approach. And now we've started to accumulate, and by accumulate, I mean mine and hold. We've not bought it because we can mine it cheaper than we can buy it. So, our strategy has been kind of a balance. There really isn't debt that works well in the market today. We see convertible instruments that, frequently have a premium to the current market, but a convertible is an overhang and it's really just pre-selling equity. And you have debt service and you have other costs associated with those type of offerings. To do an overnight offering, generally a company, even a Fortune 500 company, there's a banking fee and there's a discount to the market price to do an overnight. And so we've chosen to use a combination of we have a bit of debt. It's asset backed, about $18 million. And with our last disclosure, we have about $650 million in hard assets. So we have a really strong balance sheet. And what we decided to do is take advantage of using market conditions when the market was strong to use our shelf offering. Now, a shelf is a different type of animal. It enables us on days that the market is strong to go in and pull some capital off and to reallocate that. But it's not like an overnight or a CMPO where you take a big discount and it hits the market all at once. A lot of times those are wrapped up with warrants or options that kind of muddy the cap stack. So we've tried to be disciplined about the utilization of our shelf registration through our at the market offering and be accretive. And so what that means really is the value of the asset that we add greater than the impact of the dilution. And I think if you look, we were at 6 exahash at the end of last year. I think we had about 100 million shares. By the end of this year, we'll have 16 exahash. It's fully paid for. So the uncertainty, the doubt is gone. Where's CleanSpark going to get the money? How far do they dilute? Can they borrow cash? What's it look like? We've answered all those questions. So now we've got flexibility. So, the second half of your question about our HODL, now we can choose to retain some more of that Bitcoin, sell enough to cover all of our OPEX. And then if we have opportunities come up, we can sell more Bitcoin, we can access a little bit of equity. We're seeing debt come back available. So what we have right now is we have flexibility. So we have a super strong balance sheet with next to no debt. Our operations, as you've done a phenomenal job through your analysis of the industry, we produce more Bitcoin per exahash and more exahash per megawatt than almost any of our peers. And that comes from being vertically integrated and being what we call a prop miner. So the guys that are working 3 a.m. in Dalton, Georgia are shareholders of the company. It's different than the hosted model. I mean, Bryce, you've rented a car before. How well do you take care of a rental car? Well, it's because it's not yours, right? So what if I hit a curb? I mean, it's kind of that same approach, but by owning our facilities and owning our equipment and having the employees that work for our team that are committed to the cause, that are also shareholders of the company, they treat those machines like they would treat their own car. So we like to think that's really a differentiator, and it's part of the CleanSpark way and the culture that exists top to bottom throughout our organization.
Yeah, I love the analogy there, Matt, and definitely not the most gentle on the rentals. So that's a good one to think about. But we've talked about how important it is to have this ownership structure and the pride that your team takes, the competitiveness, the healthy competitiveness within the business. Now, you announced the fully funded 16 exahash, which is absolutely mind-blowing that you guys are getting up into the double digits. So congratulations there. But I wanted to double-click on the HODL strategy because in July, we saw your HODL or your reserve double. And I know a lot of people were really excited about that. You quickly mentioned that a lot of the Bitcoin buffs, we really feel that Bitcoin appreciation is coming in a big way here with some of these big macro, the spot ETF, the halving, the presidential election, all that kind of stuff. So you're right. You want to mix and you want to have some in your reserve if and when that big move comes. So how should we think about that now moving forward into August, September? Are we going to be seeing kind of maximum HODL once operational costs are covered, or will it again continue to be dynamic?
I think that's a really great question. And my belief is that it will probably remain dynamic based on market conditions and opportunities. As we've discussed on prior opportunities, you and I have had to chat, our approach to the communities in which we do business is different. We partner with the community. They make a markup. They profit when we buy power. The sales tax on that energy stays in the communities. It makes a meaningful difference, right? I mean, I think I was telling you that Washington, Georgia's budget went from 16 million to 30 million last year just based on the revenue they generate from us. So by having that type of relationships, we now have cities like Dalton that call and say, hey, we're one of the owners in the Vogel power plants. Dalton's its own utility. We have some surplus capacity. What's it going to take for you guys to post up here? And that's different than what you see across the entire ecosystem, because normally, Bitcoin miners are perceived to be the big bad, gonna make a mess and be noisy and all those other things. And we don't do that. We operate differently. We go in the front door, we build those relationships. So as new opportunities come up, and there's speculation all over the Bitcoin space about what is the operational efficiency that's going to have to exist post having to keep a Bitcoin miner floating. What we did yesterday is basically announced we'll be in the top 1 or 2 fleet efficiencies, but by far will be the most efficient self-miner. Owning the entire stack soup to nuts will be the most efficient. We'll have the most efficient fleet. So that gives us some flexibility. It gives us the ability to do things that other people don't do. We can underclock. So in our earnings call yesterday, we beat the bottom line on the whisper estimates from profitability, but we missed slightly on the top line. Get a call from the Forbes journalist that wrote a story on us yesterday, and she asked me, how's that possible? And the simple answer is, it's a dynamic exercise amongst our team that we're constantly monitoring energy prices, global hash rate difficulty, and the price of Bitcoin. And there are times that we make a decision to underclock our machines. So take a 30 watt per terahash machine and decrease the output from 100 terahash per second down to 70 terahash per second, but increase the efficiency to like 21 joules per terahash. So with that flexibility, and these unique data centers all have different types of rate structures. We deal with different utilities. And so we use that to our advantage. So how does that apply to the HODL? Well, go back to Econ 101, right? Supply and demand. If supply remains equal and demand remains equal, then price remains the same. Well, what we're now seeing, and Michael Novogratz spoke yesterday all over that, he sees that we're a few months away from these spot ETFs all being approved, but theorizes that there could be access to billions of dollars in additional capital looking for exposure. So if that is correct, then what we now know is sometime next April, the global supply will be cut from 900 coins a day to 450 coins per day. So if supply is cut in half, demand remains the same, price is likely to increase. But if these ETFs, and I think this is going to become a watershed moment for our industry, because what the acceptance and approval of these ETFs, and I think Cathie Woods is the first one on the docket, that will create a greater drive towards adoption of Bitcoin and an acceptance of Bitcoin truly as the commodity in which it is, and less of a money laundering, like all the stuff that was said in years past before BlackRock said, hey, it's digitized gold. So I think the change with these ETFs, the change in adoption will push people to have that desire for more exposure to the commodity. With the uncertainty that exists in the financial markets in our country, I mean, gosh, we're still in transitory inflation period a couple of years down the road, right? I mean, when does transitory end, and when do we stop printing money, and when does that devaluation, inflation curve, and subsequent, the detrimental impact that has on society, when does that all change? And one thing that we know we can control is the program scarcity into the Bitcoin algorithm. So we look at it like we have the keys to the kingdom. We produce the most Bitcoin based on the equipment that we have. We pride ourselves on being real transparent about it too, Bryce. I mean, we disclose our all-in energy costs. You got a lot of companies that say, hey, we have 2.4 cent power. My power yesterday was 1.7 cents. Okay, that's wholesale. That doesn't mean that I drive down to the transformer station and load up my truck with electricity and bring it. So they charge for that, right? There's transmission, there's distribution, there's taxes. So we talk about our all-in cost to alleviate any mystery. So including all that, we went down from 4.6 cents a kilowatt hour a quarter before to 4.1 cents now. And that has to do with, our ability to work in conjunction with these utilities. So, we did an analysis internally, and depending on the year over the last 3 years, we can curtail between 90 and 200 hours over the course of an entire year and avoid 30% of our power cost. So that's those black swan events that are just happen once in a while. But if you don't get day ahead and hour ahead pricing, you're going to run through that 56 cents per kilowatt hour that happens for an hour after a tornado comes through and rips a line down, and that messes up your financials for the entire month. So we it's not, this is not a passive business. It's not a set it and forget it. We have a phenomenal team of professionals that are passionate about what we do. And so we make those decisions to hodl, not to hodl, to pull some Bitcoin off, to add more to our balance, to access a little bit more equity capital based on a real-time, real-world analysis of what's going on today. And then, we revise and adjust and put together a new game plan for tomorrow. But we've been really blessed and fortunate that so far we've made the right choices. We sold Bitcoin at the right time. We believe we're starting to really rapidly grow our hodl. We talked about it on the call yesterday. Gary said it and Zach said it, that we plan to grow substantially our hodl balance between now and the halving.
Yeah. You said so many great points there, Matt. And for me as an investor in this company, the real differentiator is you've got a very smart, talented group, and they've got a bunch of different levers that they can pull that they're not afraid to pull. And other companies, they've been dead set on hodl or dead set on growth or dead set against dilution or whatever. But in an industry like this that's changing, evolving so quickly, I think I don't want to say stupid, but it doesn't make sense not to change as things or inputs or conditions evolve. You also mentioned scarcity in relation to the halving next year. I saw another really interesting article. Not only is Bitcoin supply capped at 21 million, halving reduces the inflow essentially of new digital currency, but the nature of the people holding Bitcoin, very few of them are looking to sell, right? And if you look at the big organizations, the MicroStrategies, Satoshi himself, the retail investors, not a lot of this Bitcoin is available for purchase, and it really amplifies that scarcity factor. So a ton to love there. Now, the other thing I really like with you guys is the transparency. I posted on Twitter that you were coming on, or X now, the channel, to answer some questions. So I've got 2 viewer questions very closely related to what we just talked about. So hopefully just kind of a one-word answer for you, Matt. But I wanted to throw these in specifically because we offered that option. So number 1, how is CleanSpark currently funding monthly operations? Will the strategy continue? And that mix of Bitcoin, debt, dilution, etc. So I feel like you've more or less addressed that one, but any other thoughts there?
Yeah, I think obviously we used equity, but we were smart about equity. We raised $56 million in the January quarter. We deployed all of that capital shortly thereafter, and now Washington is an additional 50 megawatts running, hashing, operating every day, not machines sitting in cargo containers coming across the ocean to be deployed 9 months later. So that accretive, rapid deployment of capital, the efficiency in capital is important to us. So why we said, and I think you could probably count the number of times that we said fully funded in the earnings call and then the subsequent analyst calls post earnings call, but that was the point we were trying to drive home. We get this negative, hey, gosh, they're diluting. But if you don't grow, you're shrinking. And if you can dilute and it be accretive, then you're growing and delivering a greater return to the shareholders. But if you can do all that and set the absolute bottom of the market on the price you pay for equipment, have the most favorable power management strategies, power handling, power contracts, and additionally be able to stand up to the clean tech funds and say, here's our sustainability report and we care about this stuff. And this is an independent analysis. So I think have we sold the last share of stock we're ever going to sell? Probably not. Are we going to hodl every Bitcoin that we mine from this point forward? Definitely not. We see that a blend of utilizing our Bitcoin production, I think the number, it costs us about a third of what Bitcoin sells for, if you look at the ratios yesterday. So by selling enough of our Bitcoin to cover our OPEX, that's always been kind of a fundamental core for CleanSpark. We've shifted away from that just in the last month, and we plan to continue to grow that hodl based on the supply and demand issue that you and I just discussed. But what we see really right now with $125 million in cash and cash equivalent on the balance sheet and no debt, we have flexibility. There are going to be miners that have terrific infrastructure that don't have the right machines to survive halving. And I think you're going to see some consolidation. And as evidenced by our last year, we're not afraid to jump in and buy facilities and to scale them quickly. I mean, my heavens, we bought Dalton for $9.2 million and it was empty. And 30 days later, 20 megawatts are stacked full up and hashing. We have 3 full shifts. All the cameras are in place. All of the power management strategies are in place. That thing is running like a well-oiled machine. Norcross we've yet to go below 99% efficiency on Norcross this year, or 99% uptime. So that, it's the strategy is find the right facilities. If it makes sense for our shareholders, then maybe pull some more chips off the table and buy it. Maybe sell some Bitcoin to buy a facility that makes sense now. We're seeing access to machines continue to grow. Every one of the major manufacturers is now talking about technological improvements and 3 nanometer chips and 2 nanometer chips and different immersion technologies. And I'll tell you what, with Taylor Monig kind of running our mining operations, that guy built a dual phase immersion cooling facility. I in a dorm or in a basement. If you have him on the channel, he'll show you the video of it. But he's forgotten more about immersion cooling than most people know. I mean, Taylor Monig is the TMG. They're one of the leaders in immersion cooling, and he fell in love with the passion that we have for mining and wanted to bring his expertise to our team. And so we're just littered top to bottom in our staff with people that offer something. Amanda Cavallari being a longtime Bitcoin bull and an advocate for Bitcoin for different reasons than everybody else. And being such a vocal advocate for the commodity on the Hill and the amount of time she spends in Washington. The people that we've assembled are really the differentiator. So I know this is a really long-winded answer, but every decision we make, we might, behind closed doors, beat the crap out of each other. Gary might have an opinion that differs with mine, and Zach might disagree with Isaac, and we're going to argue and we're going to support our case, and we reach concurrence, and then we execute. And it's well thought out. It's not, hey, this sounds like a great idea today, maybe we should try it. It's and analyzing the Henry Hub future pricing model and difficulty on the Bitcoin network and pending future orders and all of the variability, and then we decide in real time what it's going to look like. So what I can tell you, Bryce, that the simple answer to that question is I'm a shareholder. I haven't sold any shares of stock in my company. Zach hasn't sold shares. Gary's been buying shares. The idea that we're incentivized to dilute the shareholders is hogwash. There's nothing at all that's true about that because we're shareholders. I would like to at some point have this be worthwhile. So I feel like my interests are perfectly aligned with yours.
Yeah, no, I'm glad we just addressed that head on. And a lot of those kind of things or actions, they're hard to get rid of, right? That reputation. And I personally, again, as a shareholder here, I feel there's no problem doing that as long as you're using the money wisely. So thanks for addressing that. And I know a little bit more difficult of a question. Now, the other one I wanted to get here before I let you go, Matt, is you referenced the spot ETFs and the impact that's going to have on the Bitcoin price. And as a result, obviously the miners. Now, in my mind, and I was just talking to Tom from Talking Investing as well, we already have a way for the general public to get exposure to Bitcoin. And it's you guys, it's miners, it's MicroStrategy companies like that, right? But a lot of people really haven't picked up on this space. And that's why I'm so adamant about talking about it and supporting it on my channel. But what do you think the spot ETF, if approved, is going to do for the price of Bitcoin when we see that capital rush in? And specifically for the miners, because now there's going to be an alternative for the general public. If they want exposure, they could hold a miner or they could hold the ETF itself.
Yeah, it's interesting. There are kind of conflicting schools of thought that cash will flow out of the miners when the ETFs come or are approved because it's a less volatile exposure to the underlying commodity. If that's what you're looking for, buy Bitcoin, right? I mean, that's the simple answer. The difference is, an ETF is going to buy and own and hold Bitcoin at spot prices. The reason that a miner has a distinct advantage, especially an efficient miner, is that we have access to Bitcoin at a third of what you could buy it for because we create it. And so by managing our costs and increasing our efficiency, we increase the exposure to the underlying commodity at a much greater value. So exposure to Bitcoin in a miner that's efficient compared to an ETF isn't a one-to-one. It's much more the leverage, I think, is a unique differentiator that comes with buying an efficient Bitcoin miner. So I think it, rising tide lifts all ships. I love to listen to the different philosophies about what that's going to do to Bitcoin. At the end of the day, when BlackRock comes in and has a product that gives the average everyday investor access to a Bitcoin investment that gives them exposure to the commodity, what that does is it increases global acceptance. It changes the landscape for everyone, because whether it's implied or actual, it becomes an endorsement of some of the largest financial companies in the world of the value of the underlying commodity. And that's really the battle we fought. I mean, you see disinformation coming off out of Washington, D.C. all the time. Bitcoin mining is bad for the environment. Until you prove that it's not, it's actually a good thing, and it incentivizes clean energy production. And then it changes. Well, they don't recycle the heat, or they're too noisy, or they should do this, or they should do that. What we do is provide value, provide stability and certainty to the future of money. And so I think that there will be a little bit of maybe a ripple. But let's talk about what the next 7 or 8 months look like for our space, right? We know for a fact that the supply of Bitcoin is being cut in half. We know that in all of its existence, BlackRock has failed to get an ETF approved. Out of the thousands of times, they failed once. The likelihood that a spot ETF isn't approved isn't likely. The funds, the ETFs that currently have access, I mean, we had a post on my Twitter account, Dan Weiskopf, who runs the Block ETF and all the Toroso funds, commented on how much commitment it takes to do what we do in the room for that earnings call. These guys have, I mean, he owns millions of shares. I don't know the exact number. It's not financial advice, but these guys have the pulse of the investing public, running these ETFs and in all different spaces. I think we're going to see that it will broaden acceptance. It will change the landscape. This isn't a token. It's not a shit coin. This is new money, and with the scarcity and the decentralization and the security that it builds in, the acknowledgement that it is in fact a commodity that provides value and is another tool for an investment strategy, I think changes the game for everybody. I would hate to speculate where Bitcoin prices go, but there's a damn good reason that CleanSpark is adding aggressively to our hodl.
Yeah, for sure. Well, yeah, like you say, there's no way this many people are investing in it if they're not confident in the direction it's going. But Matt, I love these discussions. You always add so much insight, not only to CleanSpark and your operations, but the industry at a macro level as well. So I really appreciate your time, and I can only imagine how busy your day is. So this is great. Thanks for coming on today. For those of you who are still watching, please make sure you hit the like button, subscribe if you're not already part of the community. I'll leave your information and the company website in the video description as well, Matt. And have a great rest of your day. Congrats on a phenomenal quarter.
Thanks, Bryce. I look forward to doing it again next time.
We'll talk soon. Bye.
See ya.